One of the most confusing documents to try and read in business is a cash flow statement. Today I'm going to guide you through how to read it in the simplest way possible. What's going on, everybody? Craig here, and I'm a profit coach who loves helping service-based business owners finally find some peace of mind when it comes to their money. Now, if you're like most business owners, financial documents can be pretty overwhelming. And in fact, most of the time, business owners aren't even looking at them. What we're using is our bank accounts. We're looking to see how much money we have, and we're using that to base our day-to-day decisions, which actually I think is the best thing you can do. Now, that means using a system like Profit First, where you're leveraging bank accounts to give you a clear picture on how much you have for operating expenses and for your own owner's pay. But all that said, financial documents like cash flow statements are incredibly important for the business. They're going to give you a clear picture into how much money is coming in, how much is going out, and how you stand financially overall. But the problem is it's pretty complicated to look at, and sometimes our eyes can glaze over and we get into the overwhelm phase. Well, I'm going to walk you through how to look at the cash flow statement, what each section means, and how you can actually gather some value out of what you're looking at. A cash flow statement is going to be broken up into three main sections. You're going to have operating activities, you're going to have investing activities, and then financing activities. Operating activities are basically money you're making from doing what you do, the service you provide, the product you sell. This is going to be a number that's directly related to that profit loss statement because it's money that you have earned. How much has the business made from the service or product that you provide? Investing activities is money generated from assets that maybe you have bought or sold. This could be real estate or vehicles or things like that you might have gone out and bought or sold within the business. And then lastly, financing activities is both debt and equity that has been built up within the business. When you look at a cash flow statement, you can look at each of these sections and you can see how is income and how is cash coming into the business and which sections are generating the most or creating the most bottleneck. Now, when reading a cash flow statement, cash flow is usually seen as a positive or a negative. You either have positive cash flow or negative. Basically, what this means is if you have positive cash flow, you have more money coming into the business than what you have going out. And then the inverse is negative cash flow means you have more money going out than what is actually coming into the business. Now, this is very important to know because in a profit loss statement, you're not going to get a clear picture of all the things that are coming in. So for example, in a profit and loss, it's going to show your operating expenses, but it might not show your debts and liabilities like a cash flow statement will. A cash flow statement, much like any other accounting document, is just one small piece of the puzzle. Typically, you're going to want a profit and loss statement and a balance sheet to really give you a good, clear picture of all areas of the business. Luckily, I've done deep dives into both of those that you can find. In fact, I'm going to link one of them right here. Check that out. Make that the next video you watch. Hopefully this cleared up a cash flow statement for you in a simple, tangible way. Go ahead and download your report, look through it, and see exactly where you stand. Are you cash flow negative or positive? Be sure to like and subscribe this video, and I'll see you next week.